Hey everyone, it is that house guy, Nathan Graham, with What is Real Estate Education and Training and with EXP Realty. Long introduction, I know. Hey everybody, welcome to Market Monday. Today we're just going to dive through some information. It's going to be kind of a repeat of pretty much every other week to some degree, but then we're going to talk about some February numbers real quick. First and foremost, if you're watching this on YouTube, please like and subscribe. That would go a long way to help me out as many people on that channel as possible to get this out. So anyways, thank you very much for joining. Let's dive right into it. I wanted to talk about a couple articles that I ended up seeing this week, through this week and last week. Well, one was last week and one was this morning. So first and foremost, post haste, Bank of Canada is a lot closer to the inflation target and rate cuts that it thinks, says strategists. So long story short about this particular page, where we are here. Sorry, I just lost it real quick. Okay, so long story short is inflation came in lower than expected at 2.9%, which puts us between that 1% and 3% target, which is absolutely fantastic. We have been talking about inflation a lot because that dictates our interest rates. Now, when we saw the job report come in earlier this month, we kind of shifted the target of rate hikes. Like they were thinking maybe March, possibly April, and then it was like maybe April, most likely June. And I think what this altogether is getting to is I think June for sure. I personally, and again, I am a betting man, but I don't know if I bet on this. I might. I would say April we're probably going to see the first cut, and here's a lot of the reason why. So I'm gonna link this article, but first and foremost, it talks about how we went up 2.9%, which is within our target. That's down from 8.1% of June last year, which is insane. That created around a 10 interest rate hikes, which is also insane. They have this lovely little chart of where they are expecting things to go in the article. Okay, so the problem that we're running into is right here. The problematic part of inflation now is housing, is shelter. Rent went up 7.8% compared to an increase of 7.5% in December. So we saw a rate increase in rent, and mortgage costs went up 27.4% in January. So when you increase interest rates, that makes everything far more expensive, which means a lot more people are going to rent out the place, but they can't rent it out for cheaper because their mortgage is X amount of dollars. So interest rates in many ways is what's driving this current inflational period. And the only way to stop that is by cutting interest rates, building a ton of homes, but it's not exactly like they're going to build 10,000 homes by tomorrow. So first and foremost, right out the gate, that's a big sign that the next step to fix is going to be interest rates in that department. And that's why they can further seeing this happen a little bit sooner as opposed to later. Now, this follows up with another article that came out this morning by Desjardins, Yahoo Finance about Desjardins, that by the end of 2025, they figure the overall interest rate will be down to 2.5%, which is fantastic from the 5% that it currently is. Now, there's been predictions by the end of this year that will be 3.75%. One thing that is very clear to get out of the way right now is the interest rate hikes are doing their job. Our economy shrinking. I don't want to soapbox about this, but it's pretty crazy to me that hurting Canadians is what solves inflation. That drives me nuts while we're still printing money and sending it out to other countries. Anyways, regardless, sorry, I think we actually did stop printing money, but we've printed a lot. Anyways, so we are beginning to see the first interest rate hikes. And again, this is one of the first articles that goes back talking about March or April in cut potentially, which is fantastic. So we start to see the news begin to shift. We're aggressively seeing the monetary policies. We're going to see it go down by potentially half by 2025. So again, just another great article to dive into. The other thing that I like about this article is it just talks about the difference between the U.S. economy and the Canadian economy. There are some things that we do that follow the U.S., and that's why sometimes when we see their data come out, our rates hike, yet not everything we do follows them. Now, what does this look like in actual terms for our market? So I want to share. I'm just up on Market Watch. So for those in the know who've been following this for a while, I track bond rates because bond rates affect the 5-year fixed. And let's be honest, the vast majority of people right now have always went with a fixed, but people are staying away from variable right now. And so the interest rate cuts that we're talking about is going to affect variable, but this is our bond rates. And we can see bond rates have dropped. If I go to a 5-day, we had a top off at 3.65. I wish I could go back like 2 weeks, because at one point we were at about 3.8, and that was in February. And we've seen them start to come down since then to a more manageable rate. So what does this mean? I think about 2 weeks ago, based off of the data that we were seeing, I highly recommended that you get pre-approved. That recommendation doesn't change because it's not exactly like we're at basement prices. Yep, this is showing that the 5-year fix may not change as well. And we are seeing that reflected super quickly in Rate Hub. Where are we here? Okay, so some lenders reduced their high ratio options over the weekend as bond yields dip back down to the 3.5% range. Get a pre-approval is recommended when shopping and lock in for a 120-day rate. So again, the big banks are looking at about 5.14 for a 5-year fixed. You can get cheaper. First National, which is very popular, is sitting about 5.19. I have heard BMO has went into the low or high fours in some of their approval rates. So long story, like, we haven't seen much change in this over the last little while. But either way, that's good. I still do recommend getting pre-approved, because if data comes out for February and it spikes bond rates again, we could see these spike up. And remember, just because you're locked in for 120 days does not mean you're stuck with that rate. If it goes down, you can get the new rate. That's a very, very important part. Okay, so long story short, when it comes to this part of it, again, it's just seeing this nice little balance. We're not seeing these crazy activities. We talked a little while ago about 85 offers in Mississauga. We haven't heard a lot since then. Everything kind of cooled from that initial, everybody's getting out to a rush for that 1 week. But what's actually going on with home prices? So let me share this last tab. Okay, so these are our stats. If I go to the latest, so this is February right now. We can see that we have about 270 active listings and 170 sold so far for the month. We are seeing about a month and a half-ish worth of inventory in most areas. Clarington, 171, 124 sold. So our sales market is quite good and strong. Pickering, it looks like you're probably seeing a bit of a slowdown based off of 177 listed, but only 78 sales. And that could just be a tampering of the average sale price. If I look over here, your average sale price is still quite high at $962 for the year, $968 for the month. Okay, now obviously we're a month and a half in, so the year is being tilted. Now let's go back though. I want to go back to January. In January, you can see 789, 834, 954 till now. 806, 822, 962. We are seeing small increases, maybe 2-3%. Here and there. So we are seeing increases in what's happening in the market, right? So take Oshawa. You could have bought a house on average for $789, and now you're looking at, well, last month it was $822. So you're spending about $30,000 more. Now, again, why is this important? Boy, do I apparently love talking about why it's important. Just quickly. Whitby, by the way, not all areas. Some areas have stayed the same. So, okay. So what the data is kind of telling me here is that, first of all, we're not seeing massive hikes, which is good. We're seeing price increases, but we're not seeing massive hikes. So if you're like, as of the data, as of today, again, all this could change based off very positive data if we saw a spike in the market. But as of today, we're seeing that you're getting more this month than you did last month for your house if you're on the fence for selling, which is a good place to be, which means we're probably going to see increases into the spring, that spring market, and then we're going to see the dip down into the summer because that's when it always dips down. On a buyer side, we are looking also at, again, we have a good amount of inventory for Ontario, for Durham, like isn't historically not great, but for Durham, as of the last 5-10 years is good. We have a good amount of inventory. We are seeing prices go up. So if you wait till March, you're spending more than you did in February. If you wait till April, you're spending more than you did in March. So we are seeing prices come up. So sitting by the sideline isn't exactly what I'm going to recommend here. Having said that, we're not seeing this crazy multiple offers of 10, 20, 30 offers come in the last week. We kind of saw that beginning at the end of January, and then it really kind of tempered expectations. And I think a few things went along with that. First and foremost, I think the job rate, job coming in, job data coming in slowed down the market. I think bond rates going up slowed down the market. It put a little bit of fear in people thinking that their 5-year fix might go up. So they kind of held back. Now, as we just saw, all the articles are coming down with potentially faster than normal rate hikes. So that buying market is going to start coming in stronger and stronger and stronger. As a long story short, it's a good time to start having the conversation if you're wanting to make a upsize to a new property. So first and foremost, if you're upsizing or downsizing, remember you are in the market of real estate. If you are currently downsizing, though, this could be a little advantageous because the bottom market accelerates faster than the top market, right? So you don't want there to be this really, really hot market to sell because this bottom, what you're buying is going to go up faster than what you are. So there's that part to keep in mind. If you are upsizing, you're almost always good in an inclining market because what you sell for is, again, you're going up faster than what they are. So right now it's kind of that ideal time to make a shift of a bigger or smaller house, which is quite nice. First-time home buyers, I would definitely start looking at getting into the market now. Again, you can still get Aspen Springs condos for under $500, which is slowly going away. We had a lot of inventory. I was showing a few earlier in the week, and we had a lot of inventory there. And I see that all those ones are beginning to sell between $475 and $525. And currently, right now, if you're willing to take the drive in, if you're looking at like the Port Hope, the Coburg, the Belleville, Brighton, not Belleville, it's a little bit far, but Brighton market. That's also a little bit slower. Peterborough, Lindsay is all a little bit slower. So these commuter towns are a great opportunity to buy. But as we pick up here in Durham, they're going to start blowing up there too. We just want to beat that rush. So on a first-time home buyer side, I would definitely say right now there's a lot of good deals. What I would tell you though is as we're beginning to see from last month in January to this month, and let's call me a liar or not. Yeah, if I go back to December, okay, just take Oshawa for example. In December, your average sale price was $727, and then in January went to $789, and then now you're $822. So you're already spending about $100,000 more for the average house. So I probably wouldn't sit around too terribly much on a first-time home buyer sense. Just remember, we do have rent-to-own options if your credit is horrible, if you've just recently started a new job, if you own your own business or anything like that. We do have options that are there. Okay, so that's pretty much it. I'm going to wrap it up with that. The in a nutshell version again is its prices are steadily going up. This is kind of everything that we've wanted to see. We didn't want to see massive hikes come in. We wanted to see steady rises, and that's kind of what we're seeing. Is that steady rise, maybe a little bit faster than we want, but still that steady rise. So again, it's just a healthy market. So if you have any questions, reach out to myself, reach out to your realtor. Let's sit down and have a conversation. Yeah. That's the best thing I can say. Anyways, everybody have a great week. Chat soon.